What's going on, guys? I'm up here. What's up? I changed up my setup, so you're like down here on my monitor now. So, today is another trade recap. Might have been able to guess that. Um, but I'm also gonna focus on like a different sort of aspect of trading this time, and like sort of talk about how everything is, there's different quote unquote strategies and like everyone's own confluence and all and stuff like that. But at the end of the day, it's all like kind of the same stuff. So we're gonna go over like how today's trade went, plus like another bias which ended up being news. So let's just sort of focus on like what we're focusing on today, and that's liquidity. And my friends like know that I trade a little bit, and they like make fun of me because I say it so much. Like the liquidity is like whatever, and then some other stuff. So let's just get right into like a bias. Like here is straight up how you can find a good bias for trading, and I'll show you exactly how. So something that you'll notice is if we go into the 4 hour time frame, that there is, there's highs and lows, so I can delete these as well. Sorry. There's a high, sorry for my chair if it's loud. There's a high, and then there's a low, right? So if you go within the hour following this, there's going to be another high and another low. I guess in this case it's a low and then a high. And what you do from here is, if you were to go into the hourly time frame, which you are in, and sort of pick out a point within your 4 hour, you can sort of go from there and look for a direction. So if you're like, oh, I don't know where to look. Well, okay, so we see this low in the 1 hour, we see this high. So theoretically, within these hourly moves, there has to be a sort of direction that we go. So going into the hourly again, let's just say we didn't even start with the 4 hour, because in terms of timing, like it's harder to see. So let's go back to the hourly, and let's pick up one candle. So one candle here, for example, a low and a high is formed. And what you can see already is that these targets, these low and highs, one of them within each hourly candle gets swept or inversed in some way. So if we have our hourly candle here and we take it down all the way into the 15-minute now, you can sort of see how it all unpacks. How this low, it created a new high which swept this previous high. All just liquidity concepts. This previous London high, which is highlighted in purple, I won't go like this. This previous London high gets swept out during New York PM session, but it's essentially just within this hourly range that we're in. A low is formed, and then a high is formed, and the high is, you could have been trading within this. This sort of target is essentially the same thing. Liquidity on different time frames. And as you can see, so again, we sweep out this high, and then we continue targeting both the high and the low of this hourly. Does that make sense? Hopefully it makes sense. If it doesn't make sense, we will continue. But going into my trade, I see this low, and I see that this high was swept out by this same hourly candle that set a new low. So what am I thinking in here? So if we have a bullish candle sweeping a new high, essentially the only direction after sweeping this London high is downwards, is bullish. To a good target point is this previous low of the same candle. And this is all liquidity. You are going to learn, I've been doing this for maybe 3 years, and I've learned hundreds and hundreds of maybe I should put my camera. I'm gonna bring you guys down here actually. New POV. How's that? How's that work? How's that? Does that look better? Does that look worse? Here, maybe like this. Okay, perfect. Now you can actually see me and understand that here, this low and high is setting a direction. You know, and I've been trading for a long time, and I've been learning about it for a long time, and I have seen literally hundreds of different strategies be used, and it's all the same shit. It's all the same stuff. All the same shit. I don't care. Whatever. Excuse my language. But here's get into today's trade. So in the 15-minute, we set new high, sweep this high, continue lower to eventually sweep this hourly low, which we targeted way back at 3 o'clock. So if we move even smaller into the 5-minute, you can see how from sweeping this high, right after we swept it, this London high, we will continue to move lower until we sweep our hourly low. So how do you find, within this, let's just say you came in a little late, like you will see in a moment. Going down, so we're in the 5-minute right now, going down even into the 1-minute, we're looking for something called an inverse, right? Is that what it's called? An inverse hammer. And, maybe I don't actually know the name of what it's called or what traders call it, but here is the way that I look at it. Within market structure, especially on the 1-minute, you will see moments in time where liquidity is swept once again. So again, let's just say we didn't get in perfectly at this liquidity sweep, and we're going down. We're watching market move. We're seeing and this high is set. This high is set. So we can even go here. We see price move down, sweep this low, come back up. You could have even traded within here if you wanted to. See that a new high is formed. This high was formed. You come back down, sweeping a new low. You should probably be able to see this a little bit better. This high is set right here. I'll move it a little bit more. My face cam is in the way. This high is set right here. This low is set right here. But what did we do in between this high and this low? We came down and we swept a previous low. Meaning, sweeping this low pushes us higher. But since we did not close above this high or this high, your direction is the lowest low. I might be explaining this very poorly, but hopefully you can understand. Anyway, price is continuing. We'll remove our drawings, and now we see that this high is formed. And another interesting candle I want you to pay attention to is within what I am a believer in. Believer meaning like what I practice is supply and demand. And within those are rejection points that reinforces the continuation of price action. So with an indicator that I use, it let me know that this candle was in fact a draw on liquidity from a supply and demand standpoint. So if you take your entry from here and say, okay, this draw right here on the 1-minute is telling me that, all right, we are going to continue lower. But where are we continuing lower to? Well, let me tell you, if we were to go back into our hourly candle, into our hourly sort of like thing, our time frame, we can see that this hourly candle, the one that we marked out before with the high and the low, look at that. Swept a new high, came down, swept an old low. That simple. That simple. And as we go more back down here, you can see this low, whee, all the way down. Now, most of the time, you will see take profit points within your larger move. So you'll see in a second how we also utilize those. So yeah, and this is the trade. And you know, you can even set your stop a little bit above. And there's your trade. So, as we move into our top step sort of combine, first we're going to ignore the additional orders made after this trade was made. As you can see, I was trying to predict price during a heavy news time. So, exactly like I said, we it's marked out a little better here. Hopefully it's a little easier to see. Our hourly low, our hourly high, no, our hourly high, previous sweeping of high. Now, we come up, create a new high. Could be a sign of a change in price action, a change in structure, meaning that we will continue higher. But as we can see, simple tap into inverse liquidity. We take our order, trade down to previous lows, take profit points, taking profit slowly within the larger move. Came up and consolidated within this, swept, came back down. And at this point, my bias was having me come all the way down into these gaps, which another confluence is just where price likes to go. But I had my stop loss right up here, which is why you can see this order execute. And why you can see how an invalid inverse hammer, liquidity, whatever you want to call it, how they don't work as well. And that is evidenced by previous highs. So previous highs, our hammer here not sweeping liquidity, being below it. So you can tell that while in this one, our original target sweeps this high and sweeps this high. So yeah, and then this sort of bias here was that we would tap into this same hammer again and continue lower. I got out when we came like down into here, so I basically got break even. Now it's clear, filling a gap, coming lower. But that's today's trade recap. Sorry for the longer video, but I definitely wanted to explain this because it's pretty confusing and very hard to spot. And, you know, at the end of the day, this is not like easy. So knowing these things and practicing and looking at price action every single day is the most important thing that you can do. So if you're in need of a refresher, that's what these videos are for. So we continue. Looking forward to tomorrow's price action. I see us. Sweeping this high gives me less hope. But based on economic news data, we'll continue. So just to put what's on the menu tomorrow. So yeah, see you guys tomorrow. Thanks for watching. Hope you enjoy the new camera perspective. And yeah, see you guys later.